In the present economic climate, investors typically are faced with two opportunities. The first option is to safely ride out the storm by holding secure, low-risk assets such as treasury bills. On the other hand, those that are inclined towards risk could experiment with more speculative buys such as biotech stocks. The growth this class of securities offers could potentially be explosive, especially if one has picked the right stock. Given the bearish market conditions currently dotting the landscape, even high-promise stocks are trading significantly below their intrinsic levels. With biotech stocks, a number of companies that have hit significant milestones are trading at serious bargains. These are ideal stocks to consider investing in for the present month of October, given the mismatch between price and potential. Investors that take on a calculated risk, and play their cards right, could see their investment portfolios take off significantly with relatively low effort. In this video, we present ideal biotech stocks that could achieve this, and our great picks for this month. The first stock on our list is Soligenix Incorporated, a biotech company trading under the ticker SNGX, which has made some serious strides in T-cell lymphoma treatment. Following a successful third-phase flash readout back in March 2020, Soligenix is now ready to file a new drug application for its drug candidate, Hibrite. Hibrite is essentially a synthetic form of hypericin that has proven highly effective in the treatment of cutaneous T-cell lymphoma, as well as in psoriasis and similar conditions. The results indicate a significantly positive impact on T-cell lymphoma after 6 weeks of use, compared to the placebo drug. Furthermore, Hibrite also saw a further spike in treatment after 12 and 18 weeks, which is truly a groundbreaking development. The Soligenix drug, Hibrite, is well positioned to redefine the first-line treatment of T-cell lymphoma, which presents a sizable market in the US and the wider global context. The company has set annual sales guidance for the present year at $808,000, and at $3.4 million for 2023, owing to its anticipated Hibrite success. The management predicts it would be able to reel in over $90 million in sales, after the complete commercialization of Hibrite, which could see its present market capitalization jump up from $20 million to over $500 million. SNGX is down 42% in the last 12 months, despite such promising developments, which signals a great buying opportunity for investors. The stock is clearly poised to fly high in the immediate sense, and will do so with upcoming price catalysts. For the second stock on our list, we take a look at Enlivex Therapeutics, a biopharmaceutical company developing a single drug candidate called Allocetra, and which trades under the ticker ENLV. Allocetra is an off-the-shelf treatment, which is both highly scalable as well as affordable, and used to treat fatal diseases such as solid tumors and sepsis. It does so through the reconfiguration of macrophages, allowing them to be restored to a homeostatic condition. Based on Phase 1b trials, 100% of human candidates saw their sepsis and organ dysfunction fully resolved, through the Allocetra cell therapy. The study on mice with the deadly cancer form, mesothelioma, have also been especially promising. In the no-treatment group, all 8 mice had died by day 81. In the group where the mice were given high dosages of Allocetra, not only did all the mice survive, but also made a 100% recovery. Allocetra is clearly a wonder treatment, that holds the potential to make a difference in the treatment, in some of the most fatal diseases out there. The Enlivex management is confident about the next phase of trials, which will include a fully randomized and placebo-controlled environment in a double-blind study. This is likely to act as a major catalyst point for a price explosion. ENLV is a great biotech stock to keep on one's radar, given the promise it offers. As per the company's latest balance sheet, it holds cash and short-term securities worth $62 million, which is ideal for it to pull through its development through to completion. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Number 3 on our list is Incyte Corporation, a biotech company trading under the ticker INCY, and one that develops world-class proprietary therapeutic treatments. Incyte Corporation is a large company with a market capitalization of over $15 billion, with its prime offerings relating to oncology and dermatology treatment. The number 1 star product for the company is Jakafi, which is effective against both myelofibrosis and polycythemia vera. Through stellar demand of Jakafi among adults diagnosed with either myelofibrosis or polycythemia vera, Incyte has been seeing impressive financial performance. In its most recent quarter, Incyte's quarterly revenue grew from $705 million to nearly $912 million on a year-on-year basis. Similarly, the company saw its quarterly EPS exceed expectations of 75 cents, and delivered an impressive $1.01 instead. Incyte is not just a great pick due to its present strength in a fast-growing market niche, but also due to its late-stage dermatology pipeline that has been showing some highly impressive results. For instance, Incyte Soap Sora Cream was recently granted approval as treatment against moderate eczema, as well as for non-segmental vitiligo. This opens up a new avenue of a related market for the company, which strengthens its position in the dermatological realm. To add, Incyte also holds the promise of an early clinical oncological pipeline, which although uncertain at present, significantly enhances the company's upside potential. The stock clearly has much to offer, despite which its price has fallen by 17% in the last 6 months alone. Its attractive valuation and strong offerings makes it a favorite amongst bulls, which could very well drive up its price in the short term. Next up, we take a look at the China-based biopharmaceutical company, I-Mab, which trades under the ticker IMAb, and specializes in cancer and autoimmune disorders. The stock took a beating in the markets, when its price fell by almost 95% in the last 12 months. This was due to dismal performance, which saw its annual revenue from 2020 to 2021 fall from over $236 million to merely less than $14 million. Despite this bleak outlook, the company stands well positioned to take off once again, on account of a number of positive updates that are anticipated, as well as several upcoming catalyst points. The I-Mab management is fully focused on ensuring a revival through core milestone achievements. For one, the company stands confident in regards to its lemzoparlimab drug candidate. This product aims to treat high-risk MDS patients, and awaits the go-ahead toward Phase 3, from China's health and regulatory body. Similarly, company shareholders are also eagerly awaiting Phase 2 trial results of uliledlimab, for the treatment of lung cancer. These results are expected to be publicized during the upcoming months, before 2023. I-Mab further has reason to look forward to the short-term future, with at least 3 biological licensing applications, before 2025. These include the highly awaited eftansomatropin alpha for growth hormone deficiency, as well as felzartamab for multiple myeloma, both of which tap into multi-billion-dollar global markets. I-Mab is a promising biotech name, which had recently taken a beating. It now stands ideally positioned to truly take off with a series of catalyst points, making the stock ripe for the taking. The final stock on our list is Intellia Therapeutics, a biotech player which trades under the ticker NTLA, and dabbles in the realm of one-time gene therapies for rare diseases. In particular, the company has been making steady progress in the field of CRISPR gene editing, and is evidently emerging as a rising star in the domain. Intellia holds a core advantage over gene treatment competitors, which relates to its pricing. Typically, treatments like Onpatro cost over $10,300 per injection, and lifelong RNA treatments, which are repeatedly administered, can be as high as $500,000 per annum. On the other hand, Intellia's CRISPR treatments come in DIY self-administer kits, which can cost as low as $39. At present, Intellia has 5 different products already commercialized on its CAR-T platform, as a result of which its annual revenue for 2021 stood at over $33 million, and is projected to exceed $48 million in the present year. Similarly, the company's cash holding in short-term securities stand at almost $900 million, allowing it to finance further development in the CRISPR field. The company enjoys tremendous price flexibility, and is looking to make an entry into the European markets, following crucial approvals. This could very well enhance Intellia's upside potential by a significant margin. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to take on an enhanced biotech growth strategy. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to take a look at our website, stockstelegraph.com.